Thank you for joining me. I'm Alexander and I want to talk about Waitr. So, Waitr does food delivery and it's a pretty small company at $320 million market cap. Current price $2.78, so very cheap stock. Revenue $204 million, which is up 5%, a little more, but that's not a lot. Earnings $15.8 million, which is up huge, obviously. And that gives them PE of under 19 with a forward PE of 16, which is amazing for a growth stock, but the revenue growth is really not amazing for a growth stock. Dividend is zero. I don't expect that to change, especially not anytime soon. Total assets $232 million, total liabilities $144 million, which gives them a total stockholders equity of $88 million. It's a decent balance sheet. It's not nice balance sheet, but 88 million in stockholders equity compared to a market cap of 320 million is also not terrible at all. Risk factors, all the other food delivery services, Uber Eats especially, but overall I don't think anything has fundamentally changed. It's just that Uber, because of everyone having the Uber app, kind of gets the name recognition. Overall, I don't think that things are really going to change in the future. I think that if anything, more restaurants are going to shift towards like Waitr, Uber Eats, whatever, instead of doing their own deliveries, because their own deliveries also come at a cost. Now, obviously, these companies charge a huge fee, which is kind of a problem for restaurants, but it kind of it's probably still cheaper to offload that onto other people than to hire your own drivers. So with that, I think for a growth investor, current growth is virtually non-existent. I would think that they could probably get back to pretty decent growth. Definitely look into it, come to your own conclusions, see if they have the potential to grow. There's also the pandemic kind of going away soonish. I would say within the next year, obviously. So definitely do your own research in that. For a dividend investor, obviously there's not going to be a dividend, kind of pointless to talk about. And for a value investor, the PE is shockingly pretty decent. The balance sheet is pretty decent. The revenue growth is meh, but I think you can deal with that. Still, this is not a value stock because it's not a stable stock, it's not a safe stock, and it could probably go away at any time. I think it's more likely that the company will be acquired at this point than the company just going bankrupt. So overall, for a value investor, I think it's also worth a closer look. See if there's going to be major growth coming, see if they can sustain their current earnings, see if there's anything else they can do. But having a profit at this point in the game is kind of a huge win for them. So I would think that having a small investment in a company like this definitely helps you even as a value investor, especially with stats like these. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.